Forex Signals, the world's most profitable Forex resource.
Oh God, I'm gonna have to start this again. No one could tell me that that I've been ranting. Haha. All right. All right. Jesus. That's okay. I've done this update a few times today. I can handle it. All right. So what we were going to go over is quite a complicated subject. Because the chat's not working right now, I won't be able to answer too many of the questions. So I'll make it as simple as possible, and then later, if the chat comes back on, we'll have a chat about what we talked about here. Okay. Now, a lot of clients rang me up today and asked me why did the Aussie reverse, and it was a pretty big reversal. You know, come into the US session, we're looking very strong. Into the ECB announcements, like wow, we've broken 77, got our next big target there. Last month, 77.50. We break that, we can start looking at 78.50 from way back. Now the market didn't reverse because we got a nice little trend line connecting all these dots. I mean, that doesn't hurt, but that's just random chance. What really hurt this market is that after the ECB announcement, there was a major rally in bond yields around the world. Now, people are asking, well, what's that got to do with currency? Well, one of the things that's helped the Aussie rally and has helped the Kiwi, and we can have a look at the Kiwi in a second. The Kiwi is a high yielder as well, and so is the Aussie. And what this means is that the interest rates are quite high, and people go into these currencies trying to get some of that carry and some of that return from investing in those countries. And just generally, when risk is on, and say the Fed isn't raising rates, then you're looking to buy a high yielder out there, something like the Aussie or the Kiwi. Now, when Draghi spoke last night, they asked him a question about QE, and his response was pretty shocking in terms of what they were expecting was that they were going to extend it yesterday from beyond 2017. Now, with all that buying of the bonds, that keeps rates artificially low. So the yields artificially low. Because when you buy bonds, you keep the interest rate low. There's an inverse relationship there. Now, if that support is going to be taken away quicker than first forecast, then you saw some of the 2-year bonds, which expire 2 years from now, start to increase in their yield quite dramatically last night in Europe. And just like the euro leads the pairs up against the US dollar, if the euro rallies 200 points, you know that pound's going to be up 50 and the Aussie's going to be up 50, and that relationship's just the way that the market works. The same thing happened yesterday with when the European bonds rallied. Right now, you saw the US bonds rally as well in terms of the yields. Now, this led to a little bit of risk off. Stock markets fell. But most importantly, the high yielders, they saw their yield advantage start to compress. And what happens then is that it's natural for the market to sell off. Now, it's hard to get that sort of information, and you would have seen it alluded to maybe at Forex Live or in a Reuters update. There's a big rally in the yield market. How does that affect us? It affects the Aussie the most. It does affect the Kiwi maybe more, but in terms of the biggest pair out there, the Aussie, it affects the most. And if it continues, then the Aussie's going to get hit more. Now, the damage was pretty severe in terms of the technical hit that the Aussie took. One of those sharp higher day, new higher high and then a new higher low. That's a dangerous sign to the market and does lead usually to continuation. Doesn't mean that this is going to trump everything that's going on in the market in terms of the RBA being on hold and the Fed being on hold and the potential bounce that's going to give us over time. No, but right now it's enough of an issue that you should be a little bit careful when you go into the long Aussie, that this can continue for a while. Right, the bonds are coming off extremely low yields, and if they want to have a little sell-off in the bond market, which means the yields go up, then you are going to see impact on the stock market, and you're going to see an impact on the high-yielding currencies. Now, I myself are looking for the bonds to stabilize, and then when that happens, I'm thinking we've got a steal here on the Aussie. It's a nice level, and going into that Fed announcement, I do want to be long the Aussie, but I'm definitely cautious, and I haven't bought any yet. Right, so this is the main reason. I mean, you can't find a good reason for the reversal last night. apart from the bond market doing that reversal, and it's the main thing that caught us. So a pair which would be doing well right now would be something like the Euro Aussie, right? Because those yields starting to rally really destroys the advantage that the Aussie has, and because the stock markets fall off with it, does hurt the overall global sentiment, and this sort of trumps what's going on with the oil, right? And Canadian dollars interest rates are only 0.5, so they're not really getting the benefit from the high yielding. So they can actually use this to rally as well. The oil rally can help the Canadian dollar, outperform. So if you're playing those rare crosses there, the Aussie CAD cross, I'd be very careful in terms of its ability to reverse here. Alright, so it's a little bit complicated. It's a little bit, what the hell's bonds got to do with anything? Well, lately, a fair bit, especially with dollar yen. So another pair which is really sensitive to what's going on in the US bonds. A little bit less so, but the definitely does get some movement from the European bonds. Is that the dollar yen? Okay, so dollar yen broke all the rules, smashing higher yesterday. And it was looking super weak, and then all of a sudden we get this 100-point rally out of nowhere. Now we're still technically very weak, and it's probably going down lower. But it did catch the market, wrong-footed, like the Aussie. And why not use that to press the advantage and perhaps take out some serious stops here on the Aussie, which would be, below this 76 level. I'm looking towards 76.50 as a potential entry, but I'm in no hurry at all. Alright, so the ECB's disappointment led to that bond market move, and then that led to that pretty sharp US dollar rally. Now, in terms of the euro was also pushed down as the US started to move, because you can't have dollar yen go berserk like it did, and you can't have some of the other pairs reverse lower and it not affect that the euro as well. Right, but I think it was grudgingly, because on one side of the coin they actually started this rally. I mean, their yields jumped more than anyone else's. They should have got, potentially in La La Land they would have got the biggest gain. That's just not sort of how the market's set up. And so it did get pushed down, but it held up better than most. Did not help our pound recovery trade. It got reversed with it. I think we're up to almost 133.80. It's a small window into the ECB announcement to get out of any potential dip or buying that you did yesterday. All right, but he had to have that foresight to know it was going to fall, so not many people did close out. Me in particular, I did not. So I'm holding this trade now where my entries are at 35 and 60, and I don't know if I'm going to get out of these trades without a stop loss, right? I might have to take a stop here. I had a number in my head, 134, 132.40. It's the level that's going to take the stop, and that's not safe anymore. This level was a pretty big stop loss. It's 100 pips. I don't think that's very safe. If this has a second legs of the selling coming through today, if the bond market continues to go berserk, then you're going to see that the pound come under a bit of heavy pressure. That doesn't mean that this pound trade and the recovery of the UK trade doesn't have some sort of future. It's just not now, right? And you might be able to get back into it at some point when the market's focusing on the US dollar and not focusing on bond markets. And that's what you need to do when you're trading. You focus on the market at hand. I'm pretty sure the sound's working now. If that's not working now, I'm going to give up, because that was a pretty big rand again. I'm not going to repeat that one. And so, we did get some movement in the oil market regardless of this. People saw this and said, "Oh, it's impossible that Aussie fell," when they had this huge spike in the draw in the inventories. Now that it's not impossible, right, for the Aussie to go the opposite weight of oil. It's just very rare, especially when oil moves like this. But this actually added to the bond market yield rally, because it was like, well, this could be this supply disruption, and you're going to get higher inflation over time, as oil is now seem to be holding above 40 and not really under pressure, and inflation soon is going to come through from the oil market, and you're going to get higher inflation, and that the market just ran with that story as well, and that just hurt the Aussie. But in terms of the sustainability of this oil rally, I'm getting pretty close to 50. I don't want to be buying above 50 or even anywhere near 50 going to the OPEC meeting. And in terms of this number, this all-time high, or its highest since 1999 drawdown, that's to do with supply disruptions as those storms in the Gulf. Like they say that 13 million of the 15 million draw was on the back of that. So let's not get excited. I don't think the CAD got too excited. Where are you, CAD? Golly gosh. CAD. I don't think the CAD even managed to rally when the US dollar was so strong. Alright, so it does lead you back to the CAD first before we go back to the Aussie, right? In fact, no, we're not going to sell it. I don't want to stay up tonight. I'm going to be doing a quick one in terms of stream and in trade. I'm happy with my Euro Swiss. I'm happy with my Euro Yen. They're doing well post Draghi. I'm very concerned about my Euro Pounds. That was my trade of the week almost. And I misread the ECB. I thought they might do what the market expected, and that might lead to a little bit of stalling. But still, general optimism and the pound rallying. I still think we're going a lot lower here on the Euro Pound. I just, right now I'm waiting to see where we top out, and what the pound's going to do next. Suspect pound's going to try lower. It's just too close to some big stops. But I'm not panicking about the pound. But let's put some stops in just in case. So yeah, it happens. It happens that the market reverses on you during the week. I'm still waiting for this Aussie Kiwi to start to rally. And we're not even going to look at the Aussie Kiwi today. It's doing a little bit better, but it's still under a pressure. Definitely nowhere near calling the bottom in that pair. But we'll be looking at that over the coming months anyway. We're hoping to get 1,000 pips out of that trade, so it's something that I don't mind holding for a little while. Alright, excellent. I've just got confirmation that the sound is working. I'm a bit sorry that the chat room just needs probably to be refreshed. I do believe there's going to be some major upgrades coming soon, so that's going to be interesting. Imagine if we get a few more streamers, it becomes pretty much a 24/5 site while the FX markets are open. A really good place to get some extra action extra assistance with your trading, extra communication about the trade ideas that are happening, and input and feedback. There's we're all in this together. We're all against the market, and we're all got the disadvantage of not being with the big hedge funds or with the big banks. And so, we're all going to try and sort of give the best ideas that we can. And I'm pretty sure that since the $500 prize for the top 3 trade idea guys has come in, some of these trade ideas are getting a lot better. We might just have a look at some of these trade ideas right now. We're over at Forex Signals if you're watching on YouTube. Slick's in action. Slick's not a bad little oil trader. So he's looking for the market to pair back here. If I was doing anything, I'd be selling oil as well. The market went a bit berserk on a fake number. It's real in the sense that the drawdown's real, but it's only a temporary drawdown, so it shouldn't be a major issue. I mean, it's not as big as OPEC and Russia in their meeting. Alright, and he sold a little bit more of Aussie, and Aussie's going down, so both of those are pretty good. Now, Hedge Bitcoin is shorting. I think this trade will be in profit, wouldn't it? Yeah, it's doing well so far. So that's 3 out of 3 trades in profit at the moment. Travis N. Long pound Aussie. I haven't looked at pound Aussie at the moment. What's his entry? $174. I mean, it has to be higher, right? With that Aussie sell-off. Alright, so there's a few pips in profit already. It's a little bit dangerous, but it's still making money. And dollar yen, 5 hours ago. Alright, so he wants to enter a little bit lower, I believe. He's got a limit order. I think he's got a limit order. Has it been filled? No, it didn't get filled, so he's still waiting to get filled, unless it's sort of like a hypothetical trade idea. And he meant to say that he's been filled, but he should have made that clear, right? Still, I mean, it's not a bad trade idea. Just because of lack of clarity, I'm not going to give a little heads up. Euro CAD. I mean, if you're going to go Euro, right, commodity currency, why not go the Aussie or the Kiwi? The CAD's got oils back, right? That's it's a bit odd. It's not going to be clean. Alright, but still, some pretty good trade ideas, the first 4 especially. Alright, let's have a little look at some of the binary.com. Haven't done a binary trade for ages. Let's have a little look at some of the data from some of the banks last night. I mean, a few are talking about not a few, a lot are talking about the interest rate moves, but no one's really making a big call upon that. Alright, Deutsche Bank's pretty big in terms of the Eurozone and reading of the ECB, so I'm just going to have a little read of their take on the ECB last night. As I still expect the ECB to be doing something in the next couple of months. In terms of data, there is a little bit later. Just the Canadian unemployment numbers. And they could be good for a little move. And earlier today we did have some Chinese CPI. came in a little bit weaker than forecast. You might see a little bit of stimulus talk coming from that. Trade balance out of the UK was a bit of a non-event. Now that the market's settled down, we're going to just see if we can find a little bit of research on our friend, the Aussie Kiwi. All of a sudden, it's the in trade, right? As it moves towards parity, you see it talked about on Bloomberg and on CNBC. But it's it'd be interesting to see how the banks are starting to view it. We know Deutsche Bank's very bearish, right? We read that report a couple of days ago. A bit of FX pulse from Morgan Stanley. Yeah, I can imagine why they're buying Euro Yen. They're buying Euro Yen because of that yield change last night. But let's just have a look at it just to see. We're looking for some New Zealand banks. Alright, New Zealand dollar chart pack. That'll kick us off today. Let's bring up that Kiwi though so we know what we're talking about here. So those who don't know, there was some sharp selling in the Kiwi as well. We're back down to that breakout level. And you got a potential ability here to change the trend if it does have another leg lower. Alright, 8 themes in the front of the mind. New Zealand dollar is a yield and growth story. It's not just about growth and yield though, there's other powerful legs of support. The market doesn't believe the RBNZ. That's true. But it's also true the market doesn't believe the Fed either. The status quo muddling through in the global economy means that the Kiwi is the strongest by default. That's true. And low inflation around the world keeps, a lot of central banks in play. And the last one's a little technical, I won't go into it. But it's to do with where they get their money from, locally or overseas. Alright, so ANZ still believes that they're going to cut the OCR by a further 50 basis points. Alright, now if they did that, that would put the same interest rate as Australia. So that'd be an important part of the turnaround that we're looking for. Alright, given the GDP gap, they expect that the Aussie Kiwi should be closer to 110. I'm just inverting the New Zealand Aussie for you. They're quoting it New Zealand Aussie because over in New Zealand they talk like that. They're a little bit backwards. But this means New Zealand Aussie at 0.9 is about Aussie Kiwi at 110. And the cash rate spread is supposed to fall from right now. You've got the Kiwi in control to being back towards zero. Now the exchange rate hasn't fallen with it yet, but there's that gap growing. Alright, I hope that makes sense. There's an outperformance that usually does not last. And even though the commodity prices of the relative commodity prices, so one is milk for, say, milk versus iron ore, right? That still doesn't explain the size of the overvaluation. The inflation in New Zealand is extremely low, and that's allowing the central bank to cut rates. And they expect the inflation measures to low, inflation expectations to drift lower, giving the RBNZ more reason to act. Alright, they go really deep into it, so let's not read all that. I just want to see where they believe the inflation rate is a lot lower than Australia. So one of the reasons you lower your currency is that it imports inflation from other countries. Now New Zealand's a little island, so obviously it gets a lot of its stuff from overseas. Now if your currency is cheaper, then it costs more to bring those things overseas, and that's why you get this term importing inflation, and that's what they're looking to do there. That's the main reason they want to cut interest rates. But this is an important note. There's no positioning heavy long in the Kiwi. There is some very long positioning in the Aussie. So it's a bit of a concern here. Second strongest pair in the market, currency. Alright, so 2014 August intervention. And intervention in 2007. Alright, so that didn't call parity at all. And they think the RBA is on hold. So by December this year, March 2017, they expect these two rates to be together. So that's the sort of timeline that we're looking for, that recovery in that trade. Let me just check if the chat room's up. I do want to answer questions if I do get the chance. I don't know if anyone's watching. I could be talking to myself. Nah, I can see inside the YouTube stream that there's a fair few of you. So hope you're all having a good night. $111 to be exact. Alright, we're just going to finish on Morgan Stanley's Euro Yen buy. It's going to be about the jump in the yields. and also BOJ action that we can expect coming up soon. They're pretty heavy here, guys. I'm not going to read this stuff out. We want to get a clear justification of what they're doing. This is all very interesting, though. They're talking about the way interest rates affect different currencies. How rising interest rate in emerging markets can be seen as negative. Oh wow, this is a big report. Let's see if they get the exact, the trade idea exactly. Alright. They've gone long. With a stop at 112.30 and a targeting 120. Just looking at their positioning so far this year, they made a bit of money out of the CAD knock, but some of the other trades are not doing so well. Alright, Armin's coming at me from over at YouTube. Usually I don't respond to that because YouTube is the devil. But, he's asking about where I can get bond market information. I mean, generally, Reuters, if you're looking at the bond report, that will give you a bit of indication. But also, I mean, you don't need to know too much, right? You're keeping it in the back of your mind what's going on in the bonds, but it's not in the forefront. It's not really like you care too much about the stock market either. It's just you have to know what's going on. Is it going up or is it going down? Right. So in that note, I mean, you should know where the 10-year yield in the US is. You should know where the bonds are, where the gilts are. And you should know how the Japanese interest rates are moving as well. But you don't have to study in depth. Once a week, do an update. Go into Bloomberg, read a fixed income report. I might touch on it every now and again inside this update as well, just to give that exposure to you. But you just want to know if the US 10 years are starting to rally or starting to fall. There's a big level in the US 10 years, 1.5. Below 1.5, the US dollar will get crushed. That's unlikely right now, given that the yields are rallying. But back only when Yellen was when the ISM was failing, you saw some attempts down there. So, going forward, we'll try and pay a bit more attention, especially if it becomes the main theme inside some of the trading reports. And if it's what everyone's focused on, then we have to focus on it. All right, that's just the way it is. I mean, we'll learn a new game. We'll start be semi-serious bond traders. So that could be a bit of fun and give us a bit of guidance. I mean, with interest rates so low and the bond market so overbought, there was always going to be a bond bubble at some point. And so we're going to have to learn this game at some point anyway, right? Especially, as the bubble in European bonds bursts at one point. That's going to be a huge problem. Probably a huge rally in the euro, but we'll see how it plays out. But other than that, guys, there's not much on tonight. Just a little bit of CAD data. Keep your eye on oil. Keep your eye on here on the pound. See if it's going to find support. And the euro. I don't expect too much movement in the rest of the session. I want to see how the bonds go in the US session to see whether we're going to get an opportunity to buy the Aussie a little lower. Remember, that's the one trade I'm looking at, buying Aussie around 95.80. And we're starting to get close. Other than that, have a good weekend, guys. I'll be back at 9 GMT on Monday.